Hello. Hi. We would like to welcome our dear guests to the third tax regulatory update webinar. It's a series of webinars that we conduct mainly for our English speaking clients and colleagues. Today's presentation, today's webinar will cover the recently very hot topics of corporate income tax changes and their financial as well as public relations impact on the taxpayers in Poland. I will have the pleasure of conducting a part of this webinar. My name is Marcin Jaworski and I'm a senior manager in the PwC Poland tax department. And together with me is Marcin Zawadzki, who is a vice director in our tax department as well. Okay, so as I mentioned, this is the third of the series of English themed or English language webinars that we have in PwC Poland, and we will be covering the financial and PR aspects of corporate income tax regulations. We are very happy to be conducting this webinar today, as this is a particularly important day in the corporate income tax reality in Poland, because actually yesterday the Polish Ministry of Finance issued some clarifications as to the interpretation of the new Polish regulations. So we are very happy to be able to comment on them exactly almost live, because these explanations were issued yesterday. And what we will be discussing right now will be the changes to the Polish corporate income tax and their impact in the area of deductibility or lack of thereof, or limitation of the deductibility of intangible services and intangible charges. What I would like to mention to you is that we will have a couple of questions to you as participants, so that you can not only learn something from us, but you can also learn something from each other. And we'll be commenting on these questions and your answers live, as well as there is a chat operated by our colleague Mariusz Nowak, where you can ask questions both with respect to the topics of the presentation, as well as with respect to what we are saying during the presentation. What usually happens is that we are not able to answer all of the questions, but we'll try to tackle head-on the most pressing or the most interesting or the most important questions that you ask. So please feel free to ask these questions on the chat. Firstly, perhaps a little bit of history regarding the limitation of deductibility of service charges. During our previous webinar, we have asked you whether you feel these types of changes will be important for you. And most of the participants said that the new corporate income tax regulations will impact your business, and a quarter of you said that the most important changes that you anticipate will be exactly the changes to Article 15E, meaning the changes regarding the limitation of deductibility of certain interest and intangible charges. And our practice shows that in fact this is the most important part of these regulations, and our clients have the most questions and most problems with respect to this actual point. So that's why we will be discussing it in most details today. Also, perhaps just to put everybody on the same page and bring everybody up to speed, we will briefly present the regulation itself, and as a first part of our presentation regarding the financial impact of the changes. Then we will discuss briefly the most serious and most practical doubts that our clients have, and the most practical doubts that we have witnessed so far. And subsequently, We will also briefly discuss the steps or the actions that can be taken, or the actions and steps that are taken by our clients with respect to limiting or mitigating the impact of these regulations on the actual day-to-day business, on the bottom line of our clients. So basically, Regulation 15E covers or limits the deductibility of certain charges, and these charges are advisory services, management and controlling services, data processing services, advertising, market research, insurance guarantees, and services of similar nature, which is also a very important aspect, because this means that the catalog of non-deductible services is rather difficult to understand, because it includes a vague term of similar services, and that it's subject to interpretation both by taxpayers and by the tax authorities. And actually, this is also one of the points that the Ministry of Finance tried to clarify yesterday. So we will be coming back to this. Another type of charges which are limited and deductibility of which is limited are the charges for royalties, licenses, and other intangible items. And the third part is the transfer of risk related to bad loans or receivables. This limitation, this restriction, applies to costs exceeding 3 million Polish zloty plus 5% of tax EBITDA. So this is when a taxpayer has the costs of such charges as I mentioned, and they exceed 3 million plus 5% EBITDA, then they should be treated as non-deductible for corporate income tax purposes. However, the regulator, to make matters, I think, more friendly, but also what transpires more complex, also introduced a list of exceptions to this regulation, and these exceptions cover items such as costs which are directly related to production of goods or rendering of services are excluded from the limit. Costs which are incurred from third parties, from unrelated parties, of course, because this limitation covers related party transactions. Moreover, also what is exempt are costs covered by advanced pricing agreements, as well as costs which are re-invoiced, which is also a very difficult term to interpret and to understand, at least so far, and we hope to get more and more clarity on this. Plus certain specifically excluded costs of services like accounting, recruitment, or legal services. And these are the I think key exemptions from the limitation. And for all of you as participants of this webinar, I think it's also very important to understand not only the scope of services, of course, actually covered by this regulation, but also the extent of the exemptions. And we will be covering these two items in more detail. So just to sum up the background, why is it so important for all of our clients, and why we see it's important for everyone participating in, or everyone paying corporate income tax in Poland? It's because a lot of multinational companies have various, often costly, or often various transactions of high amounts in Poland, and they are related party transactions, so they could be subject to the limitation. Plus, it makes the tax reconciliation of every single taxpayer more complicated, because there are certain limits to be calculated, and we didn't have such practice in Poland before. This limitation, of course, impacts the effective tax rate, impacts the bottom line. So it's important not only for chief accountants and tax managers, but also due to the magnitude of the transaction, it can be also important for the management boards, for CFOs, etc. And this is also an important item because it requires taxpayers to take certain actions. It requires them to communicate with their capital groups, etc., etc. So it's an issue which, in our view and our experience, has impact across the organization. And so this was a little bit of the background to this. And now we will move on to the second point. The second point being the actual technical and practical doubts that we have witnessed so far, that our clients and the market has with respect to understanding these regulations, with respect to implementing them. So this is the part which we call the questions. And as I have already briefly mentioned, the key questions or the key doubts are that when a regulation is introduced which has such a vague definition of its applicability, meaning that it's not really clear to what types of services, what types of charges it applies, what everyone has to do is to think about the extent of the applicability of this regulation to one's business, and it's really difficult to do when you are faced with assessing or understanding or trying to establish what is in fact understood by advisory or management services, by marketing services, by data processing, whether it impacts all of the group charges that you have, whether it impacts all of the IT services that you have, etc., etc. So this is of course a challenge to taxpayers, and this is one area where we have a lot of discussions, both with our clients and with the tax authorities. The other technical doubts, the other technical areas where we have where we are seeing a lot of discussions is the area what should be understood as costs directly related to production or manufacturing of goods and rendering services. This is one of the exemptions, as I already mentioned, which if implemented correctly, or which if it's understood correctly, it can have a very big impact on the deductibility of these charges, and it is not really clear what should be understood as direct relation with production of goods and rendering of services. And this is in particular significant due to the fact that it could be argued that certain license fees or certain royalties, which are often significant amounts for taxpayers in Poland, that they are, or according to certain opinions, are not directly related with revenue. And this is an area where a lot of work and a lot of clarification is needed, because these are oftentimes the highest possible amounts involved with respect to this regulation. And last but not least, the area where we see certain doubts, with also associated with significant cost positions, is the issue of re-invoicing, which we will also get into in more detail further on. And now I think it's a good time to pose a question to all of you. And the question will be covering basically your approach to these points. We would like to know, and we would like to ask you and then share with us, as well as with other participants, which of the issues or aspects or changes of article introduced by Article 15E are most important for you, most significant. Whether it's the scope of services which is unclear for you, whether it's the meaning of costs being directly related to goods or services, whether it's the re-invoicing, or whether the most difficult issue for you is actually the need to change contracts, the need to obtain APA, liaise with the group, or perhaps there is some other reason. So now you can see the question, and please, if you would be so kind as to participate in this question, then we can all get some valuable information, I feel, from your answers.
Martin, very good question. What do you think? What is the most problematic for the entrepreneurs in 2018, taking into account this list?
Thanks, thanks, Marcin. I think that and my experience shows that the most difficult thing is to actually understand whether the regulation applies to you and to what extent. So basically, the discussions that we are having with our clients revolve chiefly at the first stage around the fact whether certain transactions that we have are subject to the limit or not. And this is a very difficult discussion oftentimes, because business life and the contracts that are concluded between within multinational capital groups are not drafted with this particular Polish regulation in mind, of course. So they do not differentiate clearly between marketing or advisory or management services, or they do not differentiate clearly between recruitment services and HR services, or accounting services and financial advisory services. So the first step, and the most difficult in my view for most of the taxpayers, is to actually understand whether they are subject to the limit or not. And this is actually the first point that we wanted to discuss in more detail, and this has also been, I think, very interestingly tackled by the ministry in their explanations, where the ministry tried to help the taxpayers via referring them to the Polish statistical classification of goods and services, which is I think the first time in the history of Polish corporate income tax that the statistical classification takes on such a huge significance.
Okay, thanks. We have the results. Almost half of you decided that the most problematic issue is scope of services and defining services that are subject to the limitation. 25% for answer B, so basically no clarity which directly related to goods. What is the definition of service directly related to goods? So similar, let's say, to your view.
Okay, great. That means, I hope that means that, you know, we listen carefully to our clients and and we know what their concerns and doubts are. But in fact, this is what actually happens. Okay, so coming back to this point, which, as I understand, is the most salient point in this discussion. Indeed, the ministry has tried in the commentary, in the explanations issued yesterday, the ministry has tried to refer to the statistical classification as a source of interpretations, as a source of understanding of how to understand or how to assess whether you're subject to the limit or not. And this is, I think, a very interesting point. We do not have much experience in the area of corporate income tax with the Polish statistical classification, but of course there's a rich body of work with respect to interpreting the or using the statistical classifications for Polish VAT purposes. So I think there is a path which could help taxpayers understand whether they are subject to the limit and whether and to what extent they are subject to this limit. Basing on the statistical classification, the commentary to the statistical classification, I think it could be really helpful there. I think another issue that is also, or that could be helpful for the taxpayers to understand whether they are subject to the limit, is the fact that the regulation of Article 15E, which is the limiting, so to speak, regulation, is very similar in its wording to the regulation concerning withholding tax in Poland. And we have seen the attempts by taxpayers, and we have also been trying ourselves to ask the authorities or to confirm whether it's possible to understand and interpret these regulations in line with the already existing practice of the courts and of the tax authorities in the past regarding withholding tax. So understanding of data processing, understanding of marketing and other services for withholding tax purposes, whether the practice in this area could be used to understand and to interpret the limitation from Article 15E. And we felt it was justified, and this approach has also been confirmed by the ministry in the yesterday's explanations. So I think there are a couple of good points in the ministry's explanations in this area. Of course, these explanations do not clarify all doubts. They provide, I think, a little bit of an indication of what can be done by the taxpayers. They also provide an indication of how the ministry thinks about these about this issue. So I think it will be helpful, although it doesn't in my view allow taxpayers to rest right now or to completely rely on these explanations, because as usually this type of document doesn't have any protective power. It's just an explanation, and it doesn't really cover all of the factual backgrounds that you can meet in business life, or that you are facing when you look at your intra-group contracts, for instance. So this was the first point, and as we thought the most interesting and important for you. The second point, which is also very difficult, is the understanding of what is a cost directly related with manufacturing goods and rendering services. The Polish corporate income tax law has some background and some regulation regarding so-called direct costs. However, this regulation refers mostly to recognition of costs in time. So it has a matching principle between costs and revenue, which stipulates that direct costs, meaning costs directly related to achieved revenue, should be recognized in time at the same moment as such revenue is recognized. And it has been very confusing from even the early draft stages of the new regulation, how we should understand or interpret the idea or the concept that costs directly related to goods and services are exempt from the limitation. Whether it should be interpreted in the same way as costs directly related to revenue, so in line with the matching principle, or perhaps whether we should take the accounting point of view and treat and understand these direct costs as only costs of goods sold for accounting purposes, or whether some other a little bit broader definition should be taken into account. And although initially the tax authorities issued some rather controversial and I think negative rulings, saying that the understanding of direct costs in the meaning of Article 15E was rather narrow, the most recent rulings and yesterday's explanations indicate that we should look at the direct costs as sort of items impacting the price, whether of goods or of services. So it shows that the ministry understanding is a little bit broader, and it shows that it should cover a lot of different business backgrounds, and it's a completely new field of interpretation, completely different from the matching principle and the jurisprudence accompanying that. So there will be a lot of discussions, I think, also around this area. What is a positive, which is also confirmed in several most recent rulings, is that certain costly positions like royalties or trademarks related to or charged to the Polish entities based on turnover, whether a whole entity turnover or turnover of a particular good, they could be treated as directly related to revenue and potentially exempt from the limitation, although it very much depends on each particular business situation and on the strength of the relation of the charge and the trademark to the goods and to the rendered services. And last but not least, as we mentioned, we will have 3 key points on 3 key points that we see as the most important, as the areas of doubts by the taxpayers. The last one is the idea of re-invoicing. The regulation is not clear at all in this area, and also yesterday's explanations in our view do not provide full clarity either. And the key issue here is whether re-invoicing, which is exempt from limitation, should be understood as only the situation where I'm the taxpayer who is receiving a re-invoice from a group entity, and this is a re-invoice from let's say a third-party IT service provider, or whether this exemption applies only to situations where I as a taxpayer receive a cost invoice and then re-invoice it onto another party. And this has not been 100% clearly described in the explanations. And we are aware of tax rulings which indicate that the interpretation of this issue can be broader. So basically, that it's not only where I, as a taxpayer, re-invoice a given cost, but also when a third-party cost is re-invoiced onto me. So if such line of interpretation holds, I think it would be also very, very positive for the taxpayers. And right now, having briefly discussed the key doubts that we see concerning this regulation, we would like to go through the actions that can be taken, that are already being taken by the taxpayers in Poland. And this is also an area where we would like to ask you a question, whether if you have done anything with respect to challenging or tackling this deductibility limit, what was it? What were your action steps that you have undertaken? So whether you have reviewed your transactions, whether you concluded an APA, whether you already asked for an individual tax ruling, or whether you are discussing the issue of the contracts that you have with your group, the issue of policies that you are subjected to as a Polish entity. And just like before, we would like to welcome you to participating in this questionnaire, so that not only we can share our knowledge, but also you can share the knowledge between yourselves.
In your experience, what is the, let's say, most common step taken by taxpayers? And does it depend on type of taxpayer? Multinationals do something different than the local entities?
Well, again, I think perhaps it's okay. It shouldn't be this perhaps this way to make the questionnaire more interesting. But again, I would side with the first answer. So until you understand what you're facing, until you understand what or which particular services or charges are subject to the limitation, then you don't really know what next steps you can take. So basically, I think when you want to successfully address this issue and try to limit the impact of this new regulation, you have to clearly know what you're up against and where you're vulnerable, where the limitation can apply to your position to your settlements to the greatest extent. So without the first step, in my view and in my experience, most of the projects that we do right now and most of the actions taken by taxpayers start with a thorough and complex review of the charges of the services. But by saying thorough and comprehensive, I mean also a review which has a particular goal at the end, and the goal is to understand which next steps should be taken. So it's not a review similar to a tax review, but rather a carefully tailored exercise where afterwards you can understand which of the next steps you can take. The next steps being either application for a tax ruling or application to a statistical authority, perhaps, which is an avenue that has opened, I think, yesterday due to the explanations of the ministry, that they are thinking about the statistical classification of services as an area or as a venue in which you can or based on which you can understand whether you're subject to the limit or not. And then to clarify your position, to avoid certain doubts, you can also reward your contracts so that they better reflect the actual services that you're receiving, the actual charges that are levied onto Polish entities, that they are more precisely and better described. And last but not least, for most significant charges, it is also possible to ask or to open the APA procedure, whether the full procedure or the simplified procedure, which is still considered or has been also recently presented by the Ministry of Finance. So without the review, in my view, you wouldn't know what to do and which next steps to cover.
Okay, we have the results, and it seems that our participants are still at step 1. So basically everyone, almost everyone, because it's 70% of you, is reviewing transactions and deciding whether they could be in the scope of limitation or not.
Okay, so this seems a fair point and a good and reasonable approach. And hopefully, at least for some of you, I know such clients personally as well, that the result of the review is very often more positive than the initial doubts or the initial fear regarding the regulation. Also based on the current tax rulings and this practice, as well as based on, I think, yesterday's explanations can also make some taxpayers less fearful and more comfortable with these new regulations. However, of course, in our view at least, it wouldn't be a great idea to now stop at the review and do nothing else, because as we are very much aware in Poland, the tax practice very often changes. So basically, the last point that we felt was worth mentioning and was worth bringing up is the issue of APAs. So just to remind you once again, the regulation limiting deductibility indicates an APA as a tool for exempting certain charges, exempting certain positions from the limitation. And due to this fact, expectedly, there has been a flood of APA applications directed at the Ministry of Finance. So the ministry has been working internally so far on a supplementary solution, so to speak, which would look like a simplified advanced pricing agreement process. And I think last week it has been the assumptions for the draft of this procedure have been issued. This procedure is to take much shorter than the regular APA. It's to be much simpler in terms of documentation that needs to be provided, but its protection is to extend for at least 3 years. So I understand that now this simplified procedure is in the process of consultation, and we will see what the actual shape and impact of this solution is. But definitely it's a step in the right direction, because it should allow more taxpayers to utilize this exemption. So this is basically the last thing I wanted to cover in the area of financial impact of this new regulation in the corporate income tax. And now I will transfer to Marcin, who will discuss the public relations impact of this of the new corporate income tax, or regulations associated with corporate income tax.
Okay, thank you, Marcin. Very interesting. This was about intangible services, but in a very tangible angle, because in financial angle, I'd like to cover a topic that is perfectly intangible. Basically, this is tax transparency. So tax transparency is something new in Poland. This is not exact provision. Tax transparency is a trend, and this is something what we are now facing. Tax transparency is a bundle of measures that administration has and propose towards entrepreneurs, taxpayers. This is something that should make taxpayer more visible with respect to tax administration, and build some kind of confidence between taxpayer and tax administration. This is something what covers or could cover many measures. In Poland so far we applied some solutions that could be called as supporting tax transparency. These solutions are tax rulings or tax explanations published by the Ministry of Finance, advanced pricing agreements, as mentioned by Marcin. This is something interesting and promoting tax transparency when entrepreneur goes to the Ministry of Finance, shows tax settlements methodology, and receives confirmation that this methodology is good or bad. And protective opinions, so something new, the new measure that we have in tax ordinance, also a measure to secure position of a taxpayer. What should be mentioned, these solutions that we already have in Poland are very limited. They promote tax transparency only to very little extent. And what is the new measure that Ministry of Finance implemented, and almost 2,500 entrepreneurs have to face this measure, is so-called revealing tax data of taxpayers. Basically, under the amendments to the CIT regulations that we have in force since January 2018, Ministry of Finance is obliged to publish tax data of major taxpayers in so-called bulletin. This data should be published by 9 months of the next year after the year end. Data subject to publication is tax revenue, tax deductible costs, tax income, taxable base, tax, and effective tax rate. So only certain information regarding tax position of a taxpayer. What is very interesting, I mentioned 9 months after the year end. This is the date when Ministry of Finance should publish the tax data, but according to press release and communicate from the Ministry of Finance, what Ministry of Finance wants to do is to publish tax data of major taxpayers for first 4 years this week. So basically in the end of April we should be able to review about about 2,500 CIT returns, CIT data of taxpayers for 2012 to 2016, and then in later on, Ministry of Finance is going to publish data for the last year for 2017. This is something new and something, let's say, also to some extent limited, because it concerns only CIT payers. So basically, data of payers of personal income tax will not be published. This is something new in Poland, but this is not something new in the European Union or in the world. Basically, we have similar solutions applicable in the UK or in Scandinavia. In the UK, taxpayers are obliged and encouraged to publish their tax strategies. This is something what they do on their websites. So basically, we can review tax strategies of major taxpayers in the UK. In Scandinavia, tax data, tax transparency is very important. This is an element of corporate social responsibility, and the major investors in Scandinavia, when deciding on investment, they also review CSR policy of a target. So they also review tax transparency of the target. In the UK, the entrepreneurs go even further than only publishing their tax strategy. If you take a look at this chart, taxpayers in the UK, they do not only publish their tax strategy, they also publish their explain differences between the tax data and financial data, and they present something what is called total tax contribution. So basically, they present information how much tax, in broad extent, they generate for the society, for the economy. And question, why the taxpayers do this? What is the, let's say, something what motivates them to publish this data? Basically, tax transparency is something what, due to transparency, taxpayers can show that they do care. They care about society. They care about economy, and they can receive some benefits from the tax authorities. This is, let's say, some kind of exchange between taxpayers and tax administration. In exchange for tax transparency, taxpayers can receive also certain benefits, certain level of protection from the authorities. So that's the reason why they decide to be transparent. And what is the reason behind tax administration? Why tax administration promotes the tax transparency? The reason is pretty simple. Basically, tax authorities or tax administration wants to promote some kind of self-regulation, self-control of the market. The idea is that if we make the market controlling itself, will not be, maybe not obliged, but will not be doing so many tax controls, tax audits ourselves. So basically, let's encourage consumers, let's encourage contractors to control, to review their partners. If there is some kind of trend to review, to assess tax data, tax transparency, this would help the administration to reduce the cost of control and make the tax control more efficient. And if we take a look at in the past, for last few years, we'll see that this is true, that public opinion is deeply interested in tax transparency. information on tax results, information on tax avoidance, tax evasion. This is something what is really interesting for the public opinion, and public opinion is very eager to review or to comment every information about tax results. This is something interesting for us as taxpayers, but this is something risky for taxpayers. Why this is risky? Because if we take a look that in Poland we'll be publishing only CIT information, we will receive information only about CIT position of major taxpayers. We will not receive information about entire position of taxpayer, only some part of their tax accounts. And tax transparency, this should be viewed as something more broader than only information on corporate income tax accounts. Tax transparency is something multi-dimensional. So basically, talking about tax transparency, we should think about not only results that we have in CIT return, but we should rather think about what particular taxpayer gives to the society, gives to the economy. Fact that there is low CIT paid to tax office, it does not necessarily mean tax avoidance or tax evasion. It could, for example, mean that this particular taxpayer supports goal or purposes that are targeted by the administration. So basically, this week, maybe next week, we'll receive very broad information about corporate income tax paid by major taxpayers in Poland. This is something what should not be treated by us as say key assessment factor of position or attitude of these taxpayers. CIT and in practice CIT paid, this is not sufficient information to assess what does particular taxpayer do for the economy for Poland. Basically, just take a look. Information on that CIT corporate income tax is low in Poland. It could also be derived from the fact that, for example, taxpayer utilize tax losses. Taxpayer use R&D allowance. Taxpayer operates in a special economic zone. There are a number of situations where taxpayer is even encouraged by the Ministry of Finance to reduce its CIT obligation, so that CIT paid in Poland is low and is not decisive to assess position of this taxpayer. We should rather take at this taxpayer in broader extent. If the corporate tax is low, if taxpayer promotes innovation, taxpayer uses the R&D allowance, it could also mean that this taxpayer increases employment, generates personal income tax, generates social contribution. So we should take broad look at taxpayer when considering its tax transparency. Corporate income tax is not decisive to assess this position of a taxpayer, and this is not even decisive for the state budget. If we take a look at numbers regarding inflows of CIT to the state budget in Poland and in other European countries, this is only about 10% of total inflows. So CIT, this is something what is not even considered by tax administration as very important factor from the budget perspective. Corporate income tax is even a measure to promote certain behaviors of taxpayers. If Ministry of Finance wants to promote innovation, what Ministry of Finance does? Ministry of Finance implements R&D incentive, innovation box, etc. This means allowance in corporate income tax. So the important information or important conclusion is that corporate income tax is not everything from the perspective of the taxpayer. And to summarize, in this week or next week, we'll receive a number of information about corporate tax position of major taxpayers. This is very, let's say, narrow information, and if we want to assess information about these taxpayers in broader extent, we should take a look at about other angles of activity of these taxpayers. Tax transparency, this is something what is interesting, but to understand tax transparency, we should have a broad look at taxpayers. And this is also important to remember that tax transparency, this is a measure that promotes visibility of taxpayers, but in the end, it should also promote the visibility of tax administration, tax authorities. This measure will be, I think, efficient when taxpayers who are transparent will receive certain benefits from the administration. So basically, if there is proper information from the Ministry of Finance that tax transparency would mean something for these taxpayers who are transparent, this could encourage taxpayers to be transparent and to publish not only corporate income tax results, which are not sufficient, but to uncover everything, all information about their tax position, about their business profile, about what do they generate for the economy. So basically, if we want to promote tax transparency, we should look broader, and we should expect something for exchange from the Ministry of Finance. So this is basically a very good step, which could be risky if we look at tax transparency only from perspective of corporate income tax. But this step could lead us to the situation when communication, when relations between taxpayer and tax administration are almost at the same, let's say, level, so are horizontal, not vertical. And from my side, this is, I think, everything about tax transparency. I believe this is something interesting and could make you thinking about your, say, tax position in broader extent, not only as with respect to financial impact, as Marcin mentioned, but also with respect to PR, public relations perspective. We'd like to thank you for this participation. If you have any questions, we're available for you. And hopefully next few months will be very interesting for us and for you. There are some regulations and some tax events to be interpreted, so feel welcome.
Indeed. So just to summarize, just like Marcin said, we'll be updating you on the developments in both of these areas, financial as well as PR. We are very happy to be able to discuss with you these areas in, I think, the most opportune time, actually, due to the fact that this is actually the week that both of these areas are on the agenda of the Ministry of Finance, and a lot is going on, and a lot of data and information is being published. So we will be definitely updating you on these issues, as well as continuing the trend or the course of the tax regulatory updates in the English language in the future. And of course, we would like to invite you to contact us when you feel so. So, thanks once
Thank
again.
you.